Hey everybody, happy February, the day before Groundhog Day. Every week on my slides, I always put some stupid image. And today I was going to use a picture of Bill Murray with the groundhog, but then I switched it up. But yes, tomorrow's Groundhog Day. And crypto is never Groundhog Day because every day is something new and crazy. So I hope the first month of the year was profitable and fruitful and awesome for you guys. We have, as usual, a lot of ground to cover today. But before I jump into this, so it's worth emphasizing, ETH Denver is just 2 weeks away. This is awesome. I know we have, about 8 or 10 Foxes who will be coming out to Denver on a Fox scholarship. to really experience all this for the first time. It's so cool, and for everybody that's doing that, that's amazing. So excited to have you guys out. Also, I'm sure many of you are just going to be coming out on your own, or maybe you're already in Denver. In any case, you're in for a treat. East Denver is amazing, and this iteration is going to be super, like, both in terms of scope and just the length of it. It's just going over several days. The official conference / hackathon is going on for quite a while, an extra day this year. So if you're coming out, right now, I am going to post 2 links into the general channel. ShapeShift, if you're not aware, is hosting 2 separate events. This first one here is a benefit for Coin Center. Coin Center is doing so much in DC for your crypto rights. They are really standing up against the thugs in DC and these uninformed politicians that want to fuck everything up. And this is a benefit for them. The donation is 1 ETH, and it's going to be a great dinner. We're going to have Zuko. Kevin Owaki will be joining us as crypto pioneers, and our very own Eric will be there as well. It's going to be a really fun time. So if you want to contribute to Coin Center and have a really cool evening, check that out. After that event ends, we're going to shift into full-on pre-party mode. I say pre-party because this will be the evening before the actual hackathon officially starts. And this is going to be kind of open to more so the general public, in the sense that you don't actually have to donate any ETH to attend. Grab the link here. And yeah, this will be awesome. Incredible venue. You guys are going to love the venue. We're going to have good food. I think I heard today about some sliders and awesome mac and cheese. Good drinks. Great vibe. So if you're going to be in Denver, please join us at that party. It's going to be great. And yeah, if you want to give to Coin Center, check that out as well. So moving along here, what is going on? So one thing we're just finalizing today is increasing our Fox to USDC bond from 2 million to 3 million. This bond has been a godsend because in lieu of like OTC type deals or DAO to DAO type deals that could quickly give us exposure to the stable coins that we looking for the right word. We urgently need. We really need more stables to hedge against a bear market. This has been a big win for us. So you might recall that initially this bond was set to 1 million. It was going well, so we bumped it up to 2. It's been more than a week now since we did the 2 million, and that's important because there's a week-long vesting period on people to buy that discounted those discounted tokens. So I wanted to wait until well over a week to see how price action was doing. Generally, it was pretty good. Fox was tending to outperform ETH, certainly not underperforming it. I think today was probably lagging behind, but no warning signs, no indications that too much Fox is hitting the market and the price is tanking. Of course, there's never any sure things or guarantees with these, but we feel confident that we can boost it to 3 million, which would give us an average of 100,000 USDC a day. That's huge. Every 5 days, we have roughly enough to maybe make our monthly payroll at current expenses, or maybe even a little bit more. So we're working with the Olympus team to put that into effect. I want to say thanks to the bond committee for reviewing those changes, and especially Josh, who was able to really review the all these parameters line by line. Imagine Josh putting on his coding hat there. There's a lot of detail and numbers there. So thank you, Josh, for taking a look. Let's see here. One dynamic that was happening as a result of Fox declining with the broader market is we have 2 positions that we're involved in two sort of platforms or projects, and Fox declining had an impact on our positioning in those. Namely, that was the liquidity as a service arrangement where we've received a nice steady stream of tribe, which is great. But this was presuming Fox at a certain value. And also this was in the context of Ondo vaults, which have different expiration dates. It gets pretty complex there. And then one Fox, the amount of Fox we have, or the USD value representing that, of course, declined as Fox went down. This is not news to us, but we were kind of like caught off guard a little bit by suddenly having to change our positioning a little bit with respect to these. So I kind of see this just as a learning moment where we can, in the future, just keep a closer eye on these things. And be mindful, not only of like, okay, at which points do we need to take action, given our different positioning, but also like when Fox appreciates, and this was a good suggestion made by Willie in terms of the liquidity as a service, but we can, with these vaults, for example, we could have used Fox to close out one of the vaults, or used the high price to close it out at favorable terms. So just being able to be more mindful about all this stuff, I think, is super important. And it also speaks to the need for a dashboard where, we're not just tracking our finances, but we're tracking our positions. And this is where it gets complicated because the liquidity as a service thing is a perfect example. Like it gets, okay, we have these 4 vaults. All of them have different expiries and, making sure that there's, multiple people watching these. And finally, always remembering when, in times when Fox is strong, remembering to avoid those moon fumes and think proactively about, okay, we could just as easily drop again. This is a very volatile asset. What can we do now? What sort of like prudent moves can we make to maybe de-risk certain positions or put those positions in better shape? We've been doing a really good job of this with our Fay loans on Fuse. Namely, that's like making sure we have enough collateral in the event that the price of Fox just gets wiped out, making sure we don't lose those funds. And we're very safely collateralized right now, down to like the single digits, which is great. But just keeping closer tabs on all these. Willie, you had some visibility into all that. I don't know if there was anything you wanted to add, but I think just moving forward, we'll be able to be, really keeping a close eye on all these and doing a good job.
Yeah, I think you covered it well, Kent. These were both the types of programs where when Fox price goes up, they perform really well, but when Fox price goes down, there are some negative side effects. So I think we had a really good conversation around, leverage in general and how we should approach leverage. And I think we should certainly be careful, but we agreed, that there are cases where it can make sense for the DAO to take on some of these leverage type positions. Considering that we do have a large amount of Fox in the treasury that we can leverage. We obviously shouldn't leverage all of that and get into a situation where we can't defend ourselves. But because the DAO does have such a significant amount of the total supply of Fox tokens, and we do have a large amount of idle Fox sitting there, there are some cases where it can make sense to leverage Fox strategically. So I think these are good learning lessons, and we should just continue to be very pragmatic and get better. Continue to get better, both with lessons learned from the past, and also just the TMDC committee, I think, has learned quite a bit, and we're all learning as we go through each of these about how we can DAO even better. So these are all valuable learning experiences, and fortunately, with both of these, where the exposure is limited, we don't have huge liabilities, but they're definitely valuable learning lessons.
Yeah, thanks for that perspective, Willie. Really, and it's in the context of a situation where Fox is declining, and in that sort of environment, our stablecoin reserves are more important than ever. And then having to pull from the stables, it's like, okay, well, then we're depleting our stables. The goal, of course, is eventually we'll have that goal of 10 million. on the sidelines. At that point, these sort of things where we have to pull from stables aren't quite as impactful. The threat really of depletion isn't there as much because we have ample reserves, and we're going to get there. But yeah, these opportunities are, and I don't want to give the impression that these opportunities should be avoided because, dude, I mean, these have been great. You know, just earning a steady stream of tribe is powerful, and I'm pretty bullish on that token. I mean, gosh, maybe I should buy some myself. I mean, they're really doing cool things. So just a simple example of that, or things like our Angel Vault. These are wonderful opportunities, and you know, just balancing these and being mindful of the risks. Yeah, there's been so many people in the DAO that are good at finding these opportunities and bringing them to the TMDC or to Tokenomics, and really appreciate that.
Agreed. And I want to just add a little bit more perspective too for like, you know, how severe are these? Are these big L's? And they really aren't. They're certainly not quite as big of wins as they could have been, and as we hope them to be. But to put it into perspective for this last program, we're about to have to basically pay back the Fae team about 300K Fae as we close this first vault, because they lent 5 million Fae, and so a quarter of that is 1.25 million Fae. And right now, a quarter of the total liquidity in the pool is about like 900K Fae. So we do have to pay them back about 300K Fae. But we've also, the DAO now, we're going to be getting an additional, I think it's 8 to 900,000 Fox relative to what we deposited. So we're not just losing money here. We're coming back with more Fox. Plus, we did get, you know, $10 million of liquidity about for 3+ months. So that's also, you know, something that previously we were spending a lot of Fox to rent liquidity. So it's not a complete L. The Angel Vault 2, none of those funds are gone either. We've just deposited some funds into the Angel Vault to increase the collateralization ratio. The reason we needed to do that was because in order to launch the Angel Vault program, we needed $2 million of liquidity, and that was approved by token holders. But the proposal left the means of acquiring those stablecoins up to the TMDC. We worked with the Ichi team and agreed that we could pretty safely use the 1 Fox reserves to mint that 1 Fox by depositing some additional Fox collateral. Then once the price of Fox went down, that collateral was no longer worth as much as it was when we initially made those plans. So we deposited some stable coins, which is awesome. Those were already generating the DAO. We've already earned several $1,000s of fees from that. Plus, we've been able to arbitrage this 1 Fox USDC pool, which is a really cool new tool available to the TMDC to basically turn Fox into USDC at a premium as opposed to a discount, like with the bonds program. So that's pretty awesome. And those, you know, as long as we maintain a sufficient ratio, so if the price of Fox does recover, then we can pull those funds right back out into the DAO as long as we have a sufficient reserve ratio. And in the meantime, they're generating yield. They are increasing that reserve ratio on the 1 Fox vault to make it extra secure. And they are supporting the functionality of this Angel Vault because we've increased the liquidity in that 1 Fox USDC pool. One other thing we did there is the DAO deposited $900,000 worth of Fox, which is now worth more, and that has been added to the Uniswap v3 pool above the price. So as the price of Fox goes up, those will actually convert into stable coins for the treasury. So I just wanted to provide a little bit more color there because, yeah, these are things that we're learning from and that we can do better going forward. But I wanted to provide the full context because these aren't terrible L's. So wanted to make that clear.
Yeah, absolutely. And then things like being able to get a steady stream of profits from arbing. Sorry to have you back up on stage, but what is affecting this ARB, or what is how is this ARB happening? Is like there an ARB bot automating that process? That's one thing I'm unclear is like how we're able to ARB that on an ongoing basis. Like what's implementing that arbitrage?
Yeah, unfortunately, it is not an automated process. This would require right now manual transactions. But the 1 Fox strategy did this past weekend. And so the reason this is happening, I just posted a link to this Uniswap v3 pool for 1 Fox USDC. So there's a pool on Uniswap v3 that right now it's basically the DAO and the 1 Fox strategies funds that are in this pool. And you can see it's already earned $2,600 of fees just from trade fees. And you can see right now there is less 1 Fox than USDC in the pool. what that means is that the DAO can basically mint one Fox, which again, use 80% USDC, 20% Fox. And let's just look at this example right here. You can see there's 423,001 Fox and there's 576,000 USDC. And what that means is that right now the price of one Fox is above $1. You have to spend more than one USDC to get one Fox. So what anyone could do, but the DAO specifically can do, because we've got a lot of Fox reserves, is we can mint one Fox, and then we can trade one Fox for USDC to bring that ratio back into equilibrium. And what that does is then we could set up a trade right now. So we could do a trade for, because there's 423,001 Fox, we could do a trade for 77,000 USDC. And I'll plug that in right here. And you can see that for 77,001 Fox right now, we'd get 77,009 USDC. So it's not a huge premium. But what's interesting is that we can mint 77,001 Fox with 80% USDC, which is 61,600, and with 20% Fox, which is 15,400. So we'd basically be turning, in this ARB, we'd be turning 15,400 Fox, $50,400 worth of Fox tokens into $15,410 worth of Fox tokens. Yesterday, the ARB opportunity for this was even larger. We didn't take it because we still need to do these transactions manually right now, but it was about double that. And there's an even, as the pool gets more imbalanced, the premium that we can get, the extra profits we can earn from arbing increase.
Wow, that is super cool to see. Also, I don't know what to how much fees are a consideration right now in terms of frequency of executing the ARB, but once Uniswap goes full layer 2, say once this is like fully on Arbitrum or something, which probably won't be too much longer, then that won't be a factor. You can imagine like frequently doing this with maybe just paying $1 every time or something like that. That's
totally
really cool.
I was thinking about, how do we, because this does seem like an opportunity where we can pretty sustainably, convert, at least for now, while there's a lot of volume on this one Fox pool. People are trying to scoop up one Fox, which will automatically happen too, just as trades get routed from this pool to our Angel Vault for ARB automatically. This could be like a recurring thing that we do potentially like every day to take 20 to 50K worth of Fox and turn it into stablecoin at a premium without putting any Fox sell pressure on the market. That's another cool thing about this. And maybe I was thinking, Ken, like it might even make sense, especially with this next phase of the TMGC, once there will be compensation, for there to be almost like a daily stand-up of the TMGC, where you guys come together and like maybe review any positions, do transactions like this, talk about just like a product or engineering team come together for daily stand-ups.
Hey, Willie, the other thing I noticed about this too, thanks for running us through that, is that when we bring this pool into balance, it makes it easier for our outside arbitrageurs to use it against the other pools, and so it gets used more, and our fees, like we accumulate fees quicker when it's in balance. So I think if we arbed it more regularly, we'd be earning more fees, because this fee was like 24, it was like not very far from 2,600 yesterday, but it went from, well, I'm actually not even sure what the number is when we were doing this on Sunday to yesterday. I think didn't it grow more than that? And is that true, that what I'm saying there?
Yeah, the ARB opportunity was larger yesterday, and I think it kind of came down maybe as the price of Fox came back down a little bit. People might have traded the other way, which kind of brought it back closer to equilibrium. But yes, you are absolutely right. Like when we did it this weekend, Josh is part of the one Fox Gov Crew that came together this weekend to sign it. Right after we ARB'd the pool and added more liquidity, a trade came through on the Angel Vault pool, buying Fox with one Fox. And that trade didn't happen before because one Fox was trading at a premium. So in order for it wasn't as lucrative of an opportunity, because one Fox was more expensive than USDC, which was making it not profitable for people to ARB the Angel Vault pool. So we brought it back into equilibrium, and pretty much immediately afterwards, somebody did a trade that went both through the one Fox USDC pool and through the one Fox pool.
Yeah, so I think it helps the Angel Vault run more effectively when this pool is in balance. So we should experiment with doing the ARB and balancing this pool more often. And I guess that's your whole point of the TMDC daily stand-up. Maybe that just becomes a ritual to balance this pool.
Exactly. And it brings up other questions too, just right now around our current process of like executing transactions, and something that we could probably improve. And I don't exactly have the answer right now. We don't have to brainstorm it, but yeah, right now the TMDC does not have the ability to like execute these transactions.
Yeah, it's got to be right.
Yeah. And potentially with Mr. Nerd Hair, we can come up with some cool ways to securely give them the ability to do some transactions without having to go through the.
Well, and Nick Ichi said that they are, I don't know if they said it's under development, but they're certainly like thinking about figuring out how they can have a strategy that automates some of this also.
Yes. I know they were doing that. We should talk with them too. We have a call with them on Thursday. I know they're talking about doing that for the Angel Vault pool themselves. And right now, Ichi team is doing a lot of the rebalancing for that. They're working on a poke function, they call it, which anyone can call, and that poke function can only do like specific things. So yeah, we could talk to them about potentially they can help us make a poke function for rebalancing this and arbing this one Fox USDC pool.
Hey guys, with respect to Angel Vaults, I believe those went live last week. How is that looking so far? I know we haven't really been tested by a big downdraft that might have kind of proven out Angel Vault's ability to provide buy-side liquidity in that type of environment, but it seems like things are going pretty well so far.
Yeah, so far things are going well. It's hard to know, what's causation and correlation and what's just completely coincidental, but definitely pretty much right when we launched the Angel Vault, soon after that, you can see that volume started picking up substantially, and price has risen and has stayed pretty cushy since then. So I think it's probably too soon for us to know whether the Angel Vault motivated that. And I think part of it, like a big part of it, could just be individual actors making educated decisions with the information they have available. And as somebody who's been following these Angel Vaults, I'm pretty bullish on them. And when a new project launches an Angel Vault, I think there's probably a growing community of people who are bullish on those projects, and just because they've seen the impact of these other Angel Vaults, and they see, hey, this huge buy wall just got added to Uniswap V3. The whole world might not know about this. I'm going to go buy some of these tokens basically because I got some alpha. Not sure if that's the cause, and we'll probably need some more time, but I certainly like to think that, but I also recognize that I have strong confirmation bias. So I always try to self-correct that a little bit.
There's nothing more comforting than seeing a giant buy wall when things are selling off a little bit. It's like, oh gosh, as long as that holds, I'm going to make it.
I'm actually looking, I just posted a link to the Angel Vault LP position, and if you go there and you click in the graph over on volume TVL liquidity and click liquidity, Willie, you can see we're into the buy wall right now. We're like 2 ticks inside the buy wall.
So yeah, it's got to be helping us somewhat for sure. I mean, that's what it's designed to do. Yeah, and it's cool that as it goes back and forth too, we're just generating fees from that.
And then what you can see, the idea is why one of the reasons why Ichi has done so well is that their buy wall is much taller, right? Each one of these ticks, if you hover over them, is there's like 33,000 in each, somewhere around 30K, one Fox in each one of these ready to buy Fox. But if I actually don't even know what it is, if you go to the Ichi one, but it's multiples bigger than just $30,000 worth at the different ticks.
Yep, and on that note too, so the Ichi Vault right now has a total of 8.2 million in their Angel Vault, and I think relative to their overall liquidity, that's definitely a much higher percentage of their overall liquidity. We've got 2.7 million total, and that's 2 million from one Fox strategy, and then 730K from user deposits. And the ROI is still 160% just from Fox rewards on top of that. So we should keep pushing that and try and get our target for liquidity was higher than that. That will, the more liquidity we can get in there, the better these Angel Vaults will function. Yeah,
it's a good point that the ET token is overall market volume is lower than ours too, so their ratio is way higher.
That Ichi token is a freaking beast, by the way. I did not realize until a few days ago how well it's performed. It seems like the market is really reacting well to the value proposition of the one tokens and Angel Vault.
Totally, and really the rally started when they launched their own angel vault. So again, hard to know exactly what's like causation and correlation, but good benchmark for sure. It's encouraging.
So
Yeah.
speaking of TMDC, oh, sorry, I cut you off.
I was gonna say overall, I am a fan of these community incentivized buy walls as opposed to just the traditional pull to liquidity mining. So
Yeah. You know, my first take on this stuff was like, this sounds like crazy financial alchemy. Like, does this, it struck me as like, this is just sort of like artificial, sort of, it just struck me as like, okay, is this actually going to work? But then I dug into the mechanics. I'm like, okay, this actually makes sense. It's just not some like crazy pie in the sky way to like, oh, we're going to prevent the price from falling. But the way it actually works out, it really is solid. And I mean, thus far, it seems to be effective. If you look at just what on the Ichi side of things, but yeah, I guess we'll know for sure if next time we have more of a downdraft and be able to see how things are reacting. But it's definitely good to have this in our back pocket, so to speak.
Agreed. One other thing I'll mention too. So right now our liquidity on the buy wall is somewhat spread out, and like Josh was mentioning, each of those ticks is only about like 35K of a one Fox buy wall. Ichi said that when they launch these angel vaults, they keep the buy wall spread out a little bit more at the beginning to see how it functions, and then if things are going well and as liquidity grows, they can tighten up that buy wall. So if you look at it right now, our buy wall is spread out from the current price all the way down to 4 cents. And so we have a lot of room to tighten that and make that buy wall more concentrated. But you obviously want to be a little bit careful, because if the buy wall does get completely eaten through, then everything in the vault turns into the other token, and you no longer have a buy wall. So that's kind of the balance that they're trying to strike there, and we should see that this buy wall get tightened up as we get more confidence. Cool.
So anybody looking at this screen, it's the liquidity tab where you can see this actual sexy buy wall. But I like this interface. Yeah, thanks for the color on that, guys. One thing I wanted to mention in terms of just in the context of the TMDC. So we actually talked about this in our Treasury chat prior to this. But currently, a proposal is being created with the input of the TMDC and others, being led by Rotorless, who's currently on the committee, outlining the next phase. The current phase of the TMDC was kind of intended as a trial period. It ends on February 16th. So we need to articulate what the next phase will look like and get that codified in our wonderful DAO code is law sort of thing. So just I don't anticipate any crazy changes in terms of how we operate or the scope. One notable change is Danielle will be stepping down after doing some awesome work. The tentative approach now is John will be replacing her. John is a badass and super knowledgeable about this stuff. He would be a great addition. But be on the lookout for more information about that, especially on the forum, because this will be entering ideation soon. Willie and Josh, you're still on stage. That's perfect to segue into the next topic. So we actually touched on this last week briefly, but now that we have the liquidity mining next phase approved, and this is accompanied by our LP token purchases, Willie, you had a cool suggestion for really being mindful of our stock to flow around this stuff, looking at like major sources of Fox issuance. Being mindful of our circulating supply and stuff like that. So I'm just thinking out loud, but I think as we kind of work towards developing our dashboard and tracking metrics, like specifically calling out things like that. Okay, like what are our biggest sources of Fox issuance? Of course, our liquidity mining itself will be one, but there's other areas as well. But if we have those things in mind prior to starting the program, it seems like we'll be very well positioned to execute and then also monitor what's going on.
I agree with all that. Was there a question in there?
I guess I was kind of reiterating. You guys both had some cool thoughts around that last week, so I was sort of just reiterating what you said. I'm just, and this isn't like the top priority thing right now because our phase goes until the current phase of liquidity mining goes until the end of Feb. But just kind of keeping this top of mind because.
And you're talking specifically about like the ideas behind stock to flow and how does that impact?
Yeah, and like what's our
decisions?
where is Fox being issued right now? What are the sources of issuance?
Yeah.
Mainly currently it's the bond program, liquidity mining. But
And
I
the
love those
Angel
sort of
Vault
macro
rewards.
metrics.
Angel Vault rewards are also another thing that where flow is happening, where we're rewarding Fox tokens. So
Good point.
But yeah, I mean the idea there is that any new reward program in particular needs to consider the current stock to flow, which is, think about it this way, or this is the way I think about it, and Willie, you tell me if you think about it differently. Stock is the existing tokens in circulation, and then you can go into, I would not include like the tokens that are just held in the treasury, right? But there are different ways to calculate the market cap or what's in circulation. Maybe we have two different, like stock, including what's being held in the treasury, and then kind of the stock of current tokens on the market without it. And then flow is what's the ratio of that to all of the places where we are rewarding tokens, right? Because that's basically causing inflation in a certain way of the existing supply. We're inflating the existing supply by issuing rewards that people can then take and sell on the open market. Hopefully some of them are holding it, but you never know. So having a handle on what's our current stock to flow ratio and any new program that would issue Fox rewards, how does that change that stock to flow ratio is an important consideration. And then we, figure out what's our target. What do you think will work? I mean, we're making a lot of guesses here because there are no precedents for this really, although we could start, it'd be kind of an interesting research study to go look at other DAOs and how their stock to flow ratios over time and how that's changed the price of, then watch like trends of the price and all. There's all kinds of stuff that we could do, but I don't know if we'll ever get all of that data. But still, knowing our situation is what I think is super important and not hard to do.
Yeah, that target piece is a little bit tricky because we could start tracking this, but then it's like, okay, what are we aiming for? It kind of seems a little bit arbitrary initially. What constitutes a good, like a favorable stock to flow? And maybe we need benchmarking first. I like the idea of looking at other DAOs, or we could just do what Bitcoiners do and just look at a really bullish chart and then kind of fit the stock to flow on there and say, all right, what's going to make this sucker go to $10?
I do think I like the idea just of, if we can track stock to flow, at least every time that it's changing, and then kind of overlay that over the price. So we might start to see some interesting correlation. But yeah, there's obviously more variables that impact it. But I do think I like the idea of just like figuring out, first of all, what is our current stock to flow? What is our exact circulating supply, and how much Fox is entering the market that has the potential to be sold every month? And that includes Fox from rewards and also, Fox that we're paying to workstream contributors. Maybe you could argue that it doesn't because they're opting into it and are unlikely to sell it. But those are the decisions that we need to make and decide so that we can figure out what is the ratio of new supply entering the market relative to the existing circulating supply. And like Josh said, we can at least, if there is a new proposal or a decision to increase Fox for like the bonds program, for example, we can see how that will impact the ratio. And then as we're monitoring to see the impact of it and stuff, we can just continue learning how changes to stock to flow might have a correlation with price.
Love it. So yeah, we can keep kind of jamming on this in the weeks ahead, and there is some dovetail there with the dashboard project. We had a few contributors on that sort of loose project who were unavailable for a while, but now I think we can start to resume that. I definitely see the broader dashboard project as being a perfect use case for the tokenomics fund, or the funds that have been allocated to the work stream per the original governance proposal. Currently, we have like about 16,000, or actually a little bit less now, maybe 15,000 USDC in there. And that actually segues perfectly into the next line item on my list here. That's our efforts to get Fox listed on Aave and Compound. So digging into that, it's been kind of a multi-phase, kind of multi-stage thing. Val, the dad, started us off by crafting some proposals, fitting those proposals into their respective templates. One thing that was kind of like, I didn't even notice this initially, but as I dug into other proposals, I saw that both projects have, as part of their proposals, they want you to suggest parameters for like, borrowing parameters and different, these are very like quantifiable metrics or sort of guardrails for how, these bonds interact with the platforms. Way beyond my purview. I was kind of looking at this stuff and like the best I could do is like kind of mimic what other tokens have done. So I asked Decentralized J, who you guys may have seen in Tokenomics, the Tokenomics channel, to apply some of his quantitative skills and analysis to this. He turned around and created 2 sets of just incredible recommendations. And I see you there in the audience, Jay. I just want to say, I love the approach you use, because rather than just kind of like start with some like other token as maybe an arbitrary point to maybe jam on, what they did is actually take or look at what assets are most heavily correlated or closely correlated with Fox. Those then would be the best corollaries or the best sort of assets to look at in terms of like we might want to mirror their parameters in Aave and Compound. It turns out Maker was showing, I think, the strongest correlation, and maybe something else. But this was so exciting for me because we're applying some real like number crunching and analysis. I think a Python script was used here. I love it. This in turn will get added to our proposals, and I think really make them much more, hopefully in the eyes of those communities, much more well articulated. And we're really putting some analysis behind this, and hopefully that will further along the process. So the next steps there is to weave those into the existing proposals and move them along. One challenge, and one thing we learned from trying to execute our Fei to Fox token swap is getting buy-in from the communities. We've engaged them a little bit on their Discords. Those 2 proposals kind of went under the radar so far. So we'll want to maybe create a bigger presence over there and try to really articulate the benefits of having Fox on these. And again, as Fox is spread throughout the DeFi world, it just becomes more and more useful. It's part of our big cycle of tokenomics awesomeness and use cases. Let me check the chat. So yeah, the last item here is actually, so Willie, this was your addition, and this ties right into that same strategy to get Fox everywhere. This, however, is on a different chain. Namely the proposal, this would be to Agave. We would like Fox as a lending and borrowing token on XDAI. I still call it XDAI 2. These days it's Gnosis chain, but I think it's always going to be XDAI to me. But that's good stuff. Willie, is that proposal currently with their community?
Yes, I'll find the link to that right now, and we can see how it's going so far. And this is, normally they use Gardens for their DAO framework, but they did this proposal on Snapshot. Right now we got 100% support for adding Fox. So far, so good. If you got any Agave tokens, you can still vote. That this vote runs until February 3rd. So Thursday at 10 p.m. Mountain Time.
And for those unfamiliar with what's happening on the XDAI chain, what is Agave?
Yeah, Agave is a fork of Aave that was deployed on Gnosis Chain /XDAI. It is very, very similar to Agave. One big difference, though, is the DAO framework itself. They are using Gardens as opposed to compound style governance. And Gardens uses conviction voting. And it was at least spun off or started by the OneHive community. And so if you guys remember OneHive, Honey is their token. We're friends with them as well. Yeah, I think those are the main differences. And we just did an AMA with them recently too. So if you're curious about Agave, you can search ShapeShift Agave AMA, and we just chatted with them last week.
I love all these awesome experiments with basically on-chain democracy and voting. What is conviction voting exactly?
Yeah, conviction voting came from a blog post from the Giveth community, and then OneHive actually built it. Conviction voting, relative or compared to yes/no voting, like we currently have with our DAO, that a lot of DAOs use. With yes/no voting, we make a proposal, and then people can vote yes or no. Or now they also have ranked choices where you can vote for a specific choice. With conviction voting, there's no voting whatsoever. So people make a proposal, and depending on how much funds your proposal is requesting, and that's based on a percentage of the funds in the total common pool, so the funds in the treasury, the more funds you're asking for relative to the total funds in the treasury, the more conviction you need. And conviction is a product of the amount of tokens that you're staking affirmatively behind a vote and the amount of time that you leave those tokens staked. So you can only vote, your tokens can only vote on a single proposal at a time. So if you are voting for a proposal and that proposal hasn't passed yet, and then you want to vote for another proposal, you either have to split your tokens in half between the two proposals or unstake your tokens behind one proposal and move it to another. So it's pretty interesting. And kind of one way that this plays out is if you for smaller tasks, they require less conviction. So you still need some conviction. You need people with skin in the game to support your proposal, but it's a lot easier to pass proposals for smaller amounts of funds. And on the flip side, if there's a proposal that is requesting a larger amount of funds, it requires more conviction, it takes more time or votes to actually get it passed. Just like you said, it's an interesting experiment with decentralized democracy or meritocracies.
Yeah, it's more nuanced. You could be more focused with maybe where you want to allocate your vote to. I wonder if it has a negative impact on participation from the standpoint of your casual token holder. It's like, oh man, the mental overload of this whole process is maybe it's too foreign to me, or maybe there's too much I have to actually do as opposed to just yes or no. Or maybe it encourages more people to get involved and vote because it's just more interesting, and they feel like their vote can be heard more effectively. But it'll be interesting as more projects adopt that, see how it works.
Agreed. Yeah, super interesting to see these experiments play out. I guess most of them are plutocracies really is kind of the leading strategy right now. But a big part of that is just because we don't have great Sybil resistance tools, right? So the best way to know that an individual to tie a single vote to an individual is to base it on token balances. But I'm really excited to see these decentralized identity protocols emerge and get traction, because that I think is going to have another big impact on the future of DAOs and maybe make it a little bit more like a democracy, at least if DAOs want to have that tool available to them.
Yeah. Sybil resistance is one of the great, interesting challenges right now in crypto. For those of you out there that are unfamiliar with the term, or maybe have heard Sybil before but aren't sure what it is, essentially the Sybil resistance is basically making sure that sock puppets don't overrun your crypto economic or crypto governance system, or even maybe this could be a thing even outside of crypto, but in crypto nobody knows that I can control 5 ETH accounts and vote from all them the same way, or I could pretend that each account is under the control of 5 individuals when essentially it's just me doing it. That's kind of very broadly the problem. But if you dig into governance and crypto economics, that can be a big problem. So it's and it's hard to solve just because in crypto, people don't necessarily want to dox themselves. One of the most interesting things that I've seen around this challenge has been what Gitcoin does now. They kind of you can add more points to your profile, which corresponds to a greater a greater match of your funds. So the more you sort of prove that you're a unique identity via various means. One is to add like an ENS to your account. Another is there's like an in-person reputation thing where you meet somebody and they vouch for you. And taken alone, none of those is like a perfect way to solve a Sybil resistance. But like together, it's a pretty compelling thing. So yeah, Kevin's come up with some cool ideas on that side. Willie, on the Giveth side of things, have you guys addressed that challenge much?
Sorry, which challenge exactly?
Oh, the Sybil resistance.
So yeah, we are. Bright ID was actually born out of the Giveth ecosystem. So we're big fans of Bright ID. That's the one that you're talking about, where you meet real people in real life, basically, and vouch for for them being a unique individual. But like, yeah, so Bright ID is pretty cool, but also it's a little clunky, right? You can't just come to like an app and prove that you are a unique individual. You have to join this community, and like they usually have these like parties every day in their Discord to get people to join together. It's not perfect, but it's cool. It's definitely a great improvement relative to what we had before, which was nothing. So it's going to be a big problem for us right now. We are already having to do like audits for this givebacks program. We don't know necessarily if someone's a unique individual, but we can at least see their transaction history on chain to confirm they're not like abusing this givebacks program and recirculating donations to then get free give tokens. And we're going to have a similar challenge too that Gitcoin has when we do donation matching and enable people to donate to causes and then get their donation matched. Fortunately, we are building on top of everything that Gitcoin has learned from this. They're taking their grants program and decentralizing it, and Giveth is going to be a pilot project that takes quadratic donation matching and applies it to causes, whereas Gitcoin's focused right now on open source projects. That for us is going to be a big challenge, and we're going to work with Gitcoin and all the other awesome projects in the space who are collaborating to solve this, so that we don't have to solve it ourselves.
It's cool that both DAOs are kind of inspiring each other. I didn't know that Bright ID was actually incubated in Giveth. That's awesome.
Yeah, lots of cool projects came out of Giveth, and that was mostly before I was even a part of it. But Giveth has such a deep, rich history. Even XDAI, in fact, was born out of the Giveth ecosystem when Giveth first launched on mainnet back in 2017, around the same time as CryptoKitties, and was one of the first dApps to realize the need for scaling and to help coordinate a community around solving it. Really cool history for Giveth.
Yeah, incidentally, guys, if you want to talk to Kevin about some of this stuff, what he's doing with Gitcoin, again, he'll be at that charity dinner for Coin Center. Another cool project is Moloch DAO. I'm just starting to learn a bit about Moloch. They have some interesting sort of ideas in terms of like quote rage quitting. You can pull your funds out if you don't like what's happening with the DAO you're involved in. Interesting things like that, but. Let's see. Went on a bit of a tangent there. Seth has a DeFi. Seth is requesting to come up.
Cool. After this too, I would love to talk about, if we have time, this Tokamak voting. Because I'm not sure. Maybe someone in the audience knows when the liquidity will actually get allocated. But we have a lot of toke that we can use to vote, and so I think one interesting topic of discussion is which of these liquidity pools on Tokamak do we want to vote to allocate the Fox liquidity to? So, but let's bring up Seth first, and then we can talk about that right afterwards.
Yeah, Seth, I think you can jump up whenever you'd like, if you're still wanting to talk. Howdy.
Wow, that invitation was slow. Okay, so something I've been thinking about lately is that I learned that during the most recent crash that crypto as a whole is highly correlated to the stock market. And a big issue I have with that is I know the stock market is heavily manipulated. So the question that I have is it possible for the crypto markets to not have that high correlation with a highly manipulated market? Is there any way for us to free ourselves from changes in the greater economy, or are we just going to have to adapt to it?
Interesting question. So if you look historically, it hasn't always been the case that there's such a close correlation between, say, the S&P or the Nasdaq and crypto. There's been times when the two have decoupled. Definitely, like, I guess directionally, ever since the COVID bottom happened in March 2020, directionally it's been similar, but crypto is vastly out, or at least did vastly outpace equities during that run up. Now that the risk, or now that things are changing with respect to Fed policy, it seems like, okay, now everything is moving down, and we are more correlated. But I think it's really conditional, like, on the context of like what's happening in the macro environment. And also, if you dig a little bit deeper, you'll see that, like, and I think this is a sign of crypto markets maturing, but it used to be that, like, certainly like the last big bull market, 2017, 2018, everything would almost move in lockstep. But now you're starting to see like certain sectors in crypto kind of like decoupling from each other. Maybe things that are more NFT or more gaming. Also, certain ecosystems. One thing that we've seen a lot of, like, really since its inception, but especially lately, is Cosmos. Has a really interesting tendency. Cosmos and like its related tokens have an interesting tendency to kind of buck the market trend. I don't know why that is. Like, one hunch is that maybe it has something to do with the staking dynamics, where you have to wait 3 weeks to sell. But I don't really have a firm theory on why that is. But I guess my point is, like, things are starting to decouple a little bit, and my bet would be that the projects with strong fundamentals will be able to outperform even in periods of like macro weakness where everything is tanking. Not to say that, like, I mean, if something really bad happens, then and everything gets crushed, most things probably will fall that day or week. But over the long run, this decoupling is promising. And with respect to Fox itself, like, I think if we can do a really good job of just adding value to the token with our rev share agreements and all these cool things in DeFi, and then articulating that value throughout the crypto world, we can be one of those tokens that outperforms. And also, as the macro environment changes, for sure, right now things are more risk off because the Fed is creating a tighter money policy. But over time, that could change, and I think we'll probably see the crypto decouple at some point with equities, especially as mainstream adoption accelerates. So yeah, that's kind of just my perspective, but it's interesting dynamic for sure.
I see. In that case, it seems to me then that the way to protect crypto, I suppose, from other manipulated markets is to get more people using crypto. So as we build ourselves out, if people, put their money in the crypto space instead of other things, that would also decouple us from external influence.
Yeah, I'm always cautious of the notion that, like, things are like manipulated. Like, there's this proverbial smoke-filled room, and everybody is, there's maybe a couple actors like figuring out what to do. But it is kind of manipulated in the sense of, like, if you think about equities, like, there's not as much transparency as there is in crypto, and you definitely do have things where, like, think about ICOs, where people will get a great deal getting their shares prior to, I'm sorry, IPOs. Insiders and VCs or whatever, they'll have their allocations, founders, prior to a stock going public. Then it goes public, and hey, they dump on retail. And maybe over the long run, it works out for everybody. But the beauty of crypto is, like, there isn't as much opportunity for that sort of, like, blatant manipulation, as long as there's, like, a very transparent approach to tokenomics, exactly what we're trying to do here. And also just, being able to track other things. Where's the money going? How is the treasury doing? You can do all this in real time in crypto. And man, what a powerful contrast to the opaqueness of what happens in the stock world. And I think that alone could really help crypto over the long run. Of course, you always, whenever a big dump happens, people are like, oh fuck, like the whales have nuked us down, 10% because futures are expiring, and who knows? Maybe this kind of thing could play a role on a short-term basis with price action. But over the long run, it's really those core value propositions of crypto. The transparency, the fact that people all over the globe can participate. I think that's going to really help the sector stand out.
Right. And if crypto goes down 50%, but everything else goes down 50%, the theory that some group is responsible doesn't seem nearly as good an explanation as the entire market's down, right? Or something bigger than that.
Yeah. When there's when everything is selling. I mean, yeah, we saw that with the COVID sell-off. Is everybody was just completely freaked out, and everybody just wanted to move into cash.
Right. When I say manipulate, I simply mean that the empirical reality is going in one direction and the entire market's going in another direction, right? It's like something's up there, like when all the lockdowns happened and then stock prices go way up higher than the previous year, it's like something's not right here.
Yeah. My theory with that is like fundamentals sometimes don't matter in the market until they do. In other words, it's like fundamentals do catch up eventually. Like, for example, there's been so many times, just to use the price of ETH for example, I've been following ETH for a while, and there's been so many times when ETH, the price of ETH will just be sitting there, but at the same time, there's like all this news of like increasing adoption, and you're sitting there wondering, well, why isn't the price going up? There's that classic meme, like, poking it with a stick, like do something. But then over the long run, it actually does. But I think markets in the short term can be super irrational and emotion driven, and subject to the whims and whimsies of, the prevailing opinion. But over time, like the fundamentals really do matter. And, again, with like in the context of this project, like having those strong fundamentals and earning revenue and things like that, those are super powerful, and I think almost irresistible forces over the long run. But hey, at the same time, Fox is certainly not immune to market weakness like we've seen, and that's why we got to have a nice stack of stable coins.
Absolutely. It's just like with inflation, where the delay between the cause and effect often trips people up. People are tempted to assume that an immediate effect has an immediate cause, and that's not how it works.
Yeah, maybe it's just the way the human mind is wired.
Yeah. Anyway, thanks a lot for answering my question.
Yeah, absolutely. Thanks for hanging out. Let's see, Willie, you were talking Tokamak Voting, and this is in the context of their wonderful like new interface, which has some new abilities.
Yeah, and it looks like as soon as Thursday, they're going to start slowly directing some of this liquidity. So I will admit, I'm not 100% sure on all the details, and it sounds like they haven't released all the details. But I do see that right now the DAO we have a lot of toke. And if you look at like the amount of tokes right now, or the amount of votes that we currently have for our pool, you can see that there's like 90. It automatically had made every reactor. It took it made everybody default vote to be the curve pool. So they created this curve pool that is Fox and TFox. One thing I'm not sure about is where does the Fox for this, or where would the TFox, I guess, come from? Like I can understand they would take Fox from the reactor and add it to a liquidity pool, but like where would the TFox come from? I see John typing. John probably has an answer to that. But as you can see, there's all of our votes have been automatically defaulted to this curve pool. And we also have the option to vote on the Uniswap B2 pool, which is where most of our Fox ETH liquidity is right now. That'd be paired with ETH SushiSwap, which there's currently no Fox ETH pool. I'm also not sure how that works, like if we would have to create the pool or if Tokamak would do it for us. But if Tokamak would do it for us, that's an argument to consider, but putting some votes at least to the SushiSwap pool. And then there's the balancer pool, which would also be Fox ETH. I assume 50-50, but it does not specify that. And there's also not a pool for Fox ETH over on balancer yet. So a decision
knowing
we need
that a few pools are lacking Fox is maybe one goal here, just to direct liquidity into those, so we just have a broader presence?
Yeah, that's certainly something to consider. And these pools are more useful if they have more liquidity, right? But there can be some benefits, like if you have someone just directly on the Balancer UI or directly on SushiSwap's UI, then they will be able to trade Fox. Whereas right now you need to either be like on Uniswap's UI or be using a DEX aggregator. So there are some benefits there, but less benefits if we don't have a ton of liquidity there. That is kind of where I lean though. I think that right now we've already got a decent amount of liquidity in the Uniswap V2 pool that the DAO is acquiring. I think it could make sense for us to allocate some to the SushiSwap and some to the Balancer pool, or maybe we just pick one other pool. But I do kind of like the idea of putting some more liquidity on SushiSwap and Balancer. And then another benefit that we get there is just arbitrage between the pools, basically, which can create more volume between all the pools and more returns for liquidity providers on any of the pools.
And to clarify, so let's say we wanted to make some of these changes, or vote in a certain way, and then watch how things progressed. How easy is it, or how often can we redirect liquidity? In other words, okay, we want to change our votes. Maybe over here on Sushi, we're not getting great results. We want to, switch that up.
Yeah, I think it's going to be tied to the epochs that Tokamak has, and right now these epochs are 1 epoch per day. But I've heard that they are planning to increase the length of those to be weekly. And so I assume, and don't quote me on this, but that basically we'd be able to update our votes at any time. And then at the end of each epoch, they might rebalance based on the changes in votes since the last epoch.
Interesting. So we would be able to, within over the course of epochs coming and going, we could be nimble. Eric has an interesting point. I think he says, I think fewer deeper pools are superior to more but shallower pools. Yeah, that would be the sort of thing that would be interesting to test. Is maybe we see how do shallower pools do. Maybe that engenders more participation, but also I guess it's not a mutually exclusive approach. We could add more to the pools like Uniswap V2 that are currently deep. Add more there, but then also maybe experiment with some of these other things. This is an interesting thing where it's not like a super cut and dry thing where it's like, okay, here's 4 different APYs. Maybe let's ape into the best one that seems the least risky. It's kind of a curious strategy to consider here.
Totally. And yeah, I see trade-offs on either side. There's definitely benefits to having a super deep pool, but I think there's diminishing benefits, and there's also benefits to having other pools, but the shallower those pools are, then those benefits diminish as well. So there's trade-offs, and yeah, I wish I had an answer to this, but I'm not sure. And we can look at it too, how other projects are voting for theirs to maybe get some inspiration.
When would we like to make this decision by? I mean, hypothetically, we could do this whenever we want. Is that correct?
It does seem like if we don't make a decision by this Thursday, then the default is going to be that most of this starts slowly trickling into the curve pool. But John also did mention that the curve pools are not actually live yet. So yeah, I'm not quite sure. I do know, the one question was why is a deep Fox / TFox pool important? As mentioned with these epochs, once these epochs extend to 1 week, there'll be a 1 week period before you can turn TFox back into Fox. And if we have a TFox Fox pool, that will make TFox immediately liquid, and they'll be able to go back and forth between TFox and Fox immediately. And as John mentioned, it will help support Foxy in various ways, and can also will be necessary if we wanted to have like TFox as a collateral type or Foxy. I don't know if we can't have Foxy quite yet as a collateral type because it's rebasing, but if we wanted to have TFox as a collateral type, then there would need to be a liquid market for it. You can't have a collateral where it's like locked for a week.
Right. Yeah. So Fox to TFox has some benefits outside of just the context of Tokamak, like with Fuse.
So yeah, ideally, I think we'll make a decision around this on Thursday, at least an initial decision. And again, we can update it, but it would be good to have to put some thought into this and come to a decision before then.
What happens on Thursday where a decision about this will be made?
Tokamak announced that they're going to start directing this liquidity on Thursday. So right now it's just a voting period. And then on Thursday, the votes are actually going to affect reality, and they're going to start taking the Fox as well as the other assets in the other vaults and start depositing them into liquidity pools based on those votes.
And didn't I see something from them where they're going to do like just 500K worth or just some small amount to start? Or did that already happen and they're increasing the amounts on Thursday?
Nice. You might have more information than I did. John had said that more details need to be released, but maybe they've released some of those details. If you can find where they mentioned that, please share.
Yeah, I will.
Cool.
Good stuff, guys.
Well, and another thing too. So this is another interesting point too. So Eric says, why is Fox Defox important? Another interesting thing too, and maybe I'm thinking about this the wrong way, but I'm inspired by what we've learned about these angel votes, basically, where we're like, if we're putting a bunch of Fox onto dexes, basically what we're doing is we're like putting Fox up for sale, and we're making it require more volume to move the price of Fox up, which again has trade-offs. So I think potentially if we put more Fox into the Fox T-Fox pool, let me know if I'm thinking about this wrong, that doesn't put any Fox, it doesn't really increase Fox sell pressure. Let me know if I'm thinking about that wrong, but I think that's one consideration to keep in mind as we decide where we want to allocate all this Fox. It's definitely beneficial for us to put ETH on the buy side below Fox, which comes paired with this, but maybe we don't want to put like too much Fox up for sale on these dexes. I don't know. Something to.
Hey, Willie, I just posted in stage chat. This is from Tokamak Discord server announcements that this was, I think it was yesterday or late last week, that says today 500,000 of USDC Frax and UST were ready to go into the Tokamak manager. They were put into the manager contract. A small amount will be deployed to the 3Curve pools on Monday, which was yesterday, and ramp up to the full 500K by the end of this week.
Okay, cool. So right now, I guess they are just that's more just testing stuff. And I think, it sounds like on Thursday, supposedly they're still, assuming these tests goes well, they're planning to take, I think, liquidity from all of the reactors, basically, and not all of it, but start trickling some liquidity from the reactors into liquidity pools based on those votes. But it's possible that they'll have even a more slow rollout approach and not even do it to all the pools based on the votes, but maybe just start out with like one dex. I hope they release more information soon. I know it's coming up on Thursday.
Yeah. And you know what else? Just on the Tokamak side of things, they're getting listed on Gemini. The token is. They're not on Coinbase, but they're getting listed on Gemini, which is interesting.
Another cat has entered the chat. I'll have to bring Ming in here.
Very cool. Also, fun fact too, just set up a transaction today to claim some more of our toke rewards. We had like over 11,000 toke ready to be claimed. Yeah, 11,062 toke, which at the price of 31.48 is about 350K worth of revenue. So we're about to claim that toke soon, and then we'll have even more toke that we can use to vote and earn yield on.
Well, thanks for the insight on that, guys. Yeah, we can continue this discussion in terms of what to do. If anything, maybe we feel like we don't have enough insight to really make a decision yet. We just kind of go with the default that happens on Thursday. But even if we don't decide now, this will be an important consideration in the future, especially as the value of all this stuff grows over the long run.